Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Kevin Kelly, founder and CEO of Kelly Intelligence, to discuss why the diversification effect of biotech and healthcare stocks are being highlighted by two phenomena happening right now. Kevin, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
All right, let's talk about these two phenomena that you're seeing right now. What stands out to you within the space?
Yeah, so a couple of things are happening within the healthcare and biotech space that highlight why you want to have exposure to this and how they're a great diversifier within portfolios. And if you think about what really drives healthcare or biotech stocks, it's really the idiosyncratic risk that they demonstrate, right? It's really predicated on the success of drugs and the markets that they can address. And so what we've seen is that the FDA recently has approved some obesity drugs that we've seen have additional benefits, including reducing cardiovascular risk. So what we've seen is two giant stocks, Eli Lilly and Novo Nordisk, has performed very well as the rollout of those two FDA-approved drugs have come to market.
And then you're also looking at drugs in the sickle cell space as well.
Yeah, so an upcoming event will happen where there's been trials where 31 out of 31 sickle cell disease patients have been cured from the disease. It's a one-time treatment within the CRISPR space, and so Vertex and CRISPR Therapeutics expect to get FDA approval by the end of the year for that drug called exa-cel. And it's really a game changer, much like the obesity drugs. If you think about the difference between the two things I've been talking about, if you look at what's happened with the obesity drugs, they're one-time injection, or they're 1 week injections that you have to continuously take. They're going to try to do pills. What's different about the exa-cel treatment is it's a one-time treatment. And so it goes in and it actually cures the disease within the body. So the 31 patients out of 31 have been doing well. This started back in 2019, the trials, and now they're seeking to get commercial approval here in the US.
And it really is quite remarkable. Of course, there's a shift where you want to move away from injectables to pill form. Obviously, patients can digest that better, for lack of a better term. But Kevin, do you know when you take the one-time treatments or the pill form, are they as effective as if having to do a weekly injection?
Yeah, so what's pretty interesting about what's going on for the injections, they know that it can go and be absorbed by the body and it's more of controlled, right? And so it can disperse. And so the efficacy is really high, as well as the one-time treatment for the CRISPR exa-cel. Now, the ingestible pills, they're going to have to try to see if they're going to get the same efficacy or at what dosage. So it's going to be trial and error. And this goes back to what goes on with healthcare, right? You've got to look at a long-term horizon. So what we're seeing is that we're starting to see this come out now, but we're going to have to follow this over the next 5, 10, 15 years to look at dosage, efficacy, and actually patient outcomes over the long term.
So, Kevin, when you separate the trader from the long-term investor, this is something, to your point, that you have to have a longer-term horizon with. It's not just betting on an ETF or a stock with perhaps an FDA approval or an injection of money. This is something where, you know, the R&D not only takes time, it also takes money. I mean, this is something that you have to think of in a longer time frame as you think about your overall portfolio.
Yeah, I mean, if you take a step back, I mean, it could take 10 years to get a drug approved. If we take a step back and think about these obesity drugs, they're actually derived from venom of a Gila monster, and it was discovered long ago. And so now it takes time to get through the different phases in the FDA. And then when you look at newer technologies like CRISPR, which is newer, they're going to take a lot longer to get through that approval process because they want to make sure, because it's never been done before, there's no off edits, what's called in other strands of the genome. So they're going to take their time in making sure that the outcomes are what they need. And one thing that happens, though, Jill, that you're talking about, the trader aspect versus the long-term investor, is that these drugs can be very costly. And so it'll take time for the companies to get Medicare reimbursements, if they can get some insurance reimbursements. So it could take a long time for them to get to scale to make profitability on these drugs and also get adoption from the insurance market.
All right, Kevin, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.